Hi, and welcome back to my channel. We got some really great news. As you can see, almost no movement on the day, but since I made my last video, we've had some enormous gains. So right now I have 3250 invested, which means, as you can see, I'm up about $235 all time. New record highs, shattering what I had previously done. Very, very excited about that. This video, I'm going to be talking about some of experts' opinions on what the stock market's going to do this year and whether or not it's actually topped out. It's a question I keep asking myself because we've seen such large gains recently, and even within the last year or so. There's a lot of skeptics out there and a lot of people saying that it's been roughly 10, 12 years since our last recession, and they're really looking for and being pessimistic about the chances of another recession. So we'll go ahead and look on the week. I'm up about 1%, not huge, but definitely good to see. On the past month, up 5.5%, and 3 months here is where it really gets interesting, up 10.5%. Super, super excited about that. Clearly, I was down, so I'm only up just over 7% all time, but those are definitely great strides to make. So, the real interesting stocks that I had this week are Coca-Cola. I actually got a notification they hit a 52-week high just today, so we can see up 1450 on that all time. I always like to talk about this one, Dividend King. A ton of reasons to like Coca-Cola, even though projections have them slowing down within the United States and perhaps even slowing down globally. Up 5% in the last month. On the year, up 20%, which is very typical of everything in the stock market, especially the larger companies in the S&P 500. So not a ton of growth over the past 5 years, but that dividend did grow this year from 40 cents a share to 41 cents a share. Now, of course, we don't know what their earnings are going to look like for this next quarter, estimated at 44 cents per share. That will definitely be something to look onto for the future. Next up, we have Logitech. This is my other company. They also hit a 52-week high this morning. So another really exciting one for me. And as we can see, up almost 25%. So clearly a stock that I should have bought more of, but something that I will probably be buying more of in the future. Logitech is an interesting one. They do pay one dividend per year. It's a large dividend, but that is a little bit odd. Typically, we see dividends paid out quarterly, or even I have a couple stocks that pay out monthly. But as we can see, up 4% on the month. On the year, up 44%, which is incredible. And over the past 5 years, you can see, coulda, woulda, shoulda. This would have been a great stock to invest in back in 2015. When we look at our earnings calls, we can see that this past week they announced earnings. Their actual earnings was 84 cents a share, estimated at 79 cents. So that is a decently large margin that they beat their expectations by. And we can see trending upwards here on the earnings. Now, if we look at my history, we can see that I have not bought here since July, but it did pay that dividend in September. Now, those 3 shares paid out at 48 cents per share. As I said, it does pay out once a year. Next up, we have SPHD. I do like to talk about this one every week. It is a very interesting one to me and one that I think I should talk about more often. This is the one that pays out monthly, as I previously mentioned, up almost $17 on that all time. I am down on the day, and even in the past month, it's been slightly spotty. But when we start to zoom out further, we can see that this has been a good performer for me. Even when we look at the past 5 years, only up 30%, but with a very high dividend here, that is really the big selling point. Not looking for a ton of growth in the ETF itself. Now, Agilent is another one that I want to talk about because they are looking at all-time highs right now. As we can see, up almost 26% on Agilent all time. Over the last month, up 6%. Over the last year, up 26%. And over the past 5 years, up 135%. Decently high buy rating here on Robinhood. Agilent's dividend, we can see on the 22nd. This should get paid 36 cents because I have those 2 shares. And as we can see, I got the dividend back there in October and July. Now, the last stock that I want to go ahead and talk about is an interesting one. And let's see if we can find it here. I just lost it. Sony. Here we go. Sony's trading for about $72 right now. Another really big seller for me. 86% buy rating on Robinhood. Over the past 3 months, we can see that consistent growth. And if we look at 5 years, it's really been incredible, up 246%. I talked about it previously a little bit, but I think that the new PlayStation 5 coming out towards the tail end of this year could be huge for Sony. Definitely couldn't hurt them and could definitely be something that really increases growth a lot for them. So earnings, as we can see, available in just a couple weeks on the 4th. Their earnings have been up and down. Interesting enough, they don't have a projection here on Robinhood, but something that I will definitely be taking a look at. And of course, Bitcoin. This is actually my largest holding, as I've mentioned in some other videos. Still down $75 on this all time, but I'm not concerned. I have lots of videos about why I'm not concerned, so if you'd like to, go ahead and check those out. For the past month, up 16%. For the past 3 months, we can see that they broke out of this decline and are now in sort of a growth trend, growth pattern. About $9,000 has been the mark that most analysts want to see Bitcoin break. It has temporarily broken that $9,000 mark here in the last month, but for it to do well in the future, we're going to have to see breaking past that $9,000 mark for sure. And now that I've talked about all these stocks, and as I mentioned, a couple of those have seen all-time highs and 52-week highs here in the last week, I think it's important to ask the question, is the stock market going to continue in this direction, or is it headed downward? Mark Cuban actually has talked about this fairly recently, and I think it's a very important thing to listen to, because he's somebody that's A, very knowledgeable, and B, somebody that doesn't really sugarcoat what he says. Mark Cuban is known for saying what he wants to say. For those who are not aware, he sold his internet sports streaming website to Yahoo right before the bubble back in '99. Made lots of money, currently owns the Dallas Mavericks, an NBA basketball team, and of course is on Shark Tank, one of everyone's favorite TV shows. And here he's talking about how there's a way to correlate what's currently going on to 1999, but what we're seeing right now is certainly not the same. And he's got a couple different reasons for this. So here they were just talking about the background as I just did, and he said interest rates were a lot different back then. You saw a lot more people participating in the market. You don't see that now. The individual day trading really led the market to be frothy. Now, the interesting thing that I get out of this is it's totally the polar opposite approach to what Dr. Michael Burry has said, which I've talked about in the past. Michael Burry believes that we've got a little bit of a bubble forming because of these index funds and ETFs, and Mark Cuban really sees it the other way, and that it's more stable and more controlled. So definitely something to look out for. And clearly the interest rates were a lot different back then. We do know that. He talks about later in here, interest rates are about a third of what they were back in 1999. There's a lot of reasons for that, but the Fed controlling those interest rates could definitely be a factor in all of this. So here he says there's so much money chasing index funds, so as long as those funds keep on growing, the market's going to go up. So as I mentioned previously, broadcast.com sold for $5.7 billion, made a lot of money on that. Cuban's comments Wednesday were in response to concerns from investors who are comparing the stock market's current valuation to the bull market in 1999 that concluded with the collapse of the dot-com bubble. As they mention here, speculative markets, especially in those internet stocks, a lot of people believe that stocks currently have a lot of speculation affecting their prices, and they may currently be overvalued. We haven't seen anything like a 500% increase in a 5-year span, so certainly not as extreme as then, but definitely a bull market. Now, here is a very interesting one. In '99, they note that the consumer price index increased 2.3%. For those who don't know, that measures the cost of goods created in the United States specifically, and it's a good way of measuring both inflation and market growth. So 2.3%. But like Cuban, Jones noted the difference in interest rates in 1999 and 2020. So here is where I was talking about earlier. The Reserve set interest rates at 4.75% back then, and now they're hovering between 1.5 and 1.75%. So clearly very, very different. And we can see the S&P 500 is up around 3% year to date, and its 29% gain in 2019 was its best annual performance since 2013. Last year was a historical performance, and there's no reason to believe the stock market is going to do nearly as well this year as last year. As I mentioned in my last video, a lot of analysts are projecting anywhere from 3 to 5% growth, which would certainly be a disappointment. But granted that last year was such a large market and such a large gain, I don't think there's any reason to be pessimistic about that. And here, Cuban wraps it up by saying, I think interest rates will tell us what's going to happen in the next market. Is it frothy? You can definitely make that argument. Is it like 1999? No. Again, I'm not an expert, and Mark Cuban certainly is not the only person who has opinions on this topic, but I do think it's important to look at the opinions of these people and understand why they think what they think, and use that to make informed decisions for investing both on my channel and anything that you may like to see. So as I always like to say, thank you for watching the video through to this point. Please like the video, subscribe to my channel, and comment. Let me know what you'd like to see, what you don't like to see, and I'll be back with some more content here at the end of the week. Thank you.